Hey, this is Matt from InvestiQuant. Today is Thursday, September 16, 2021. Tomorrow is options expiration day, so I figured we would look at what has happened historically the day before options expiration day. So let me go ahead and set that up here in Discover. I'm going to get all four instruments selected. The setup will be based upon entering the market long at the open of regular trading hours, which is 9:30 a.m. Eastern Time. I've got the exit set to 4:15 p.m. Eastern Time. Currently, the market is trading lower. I'm going to go ahead and add that to this study here by going on, clicking on the opening filters library, and then in the gap direction, I'm going to click gap down. You can come in here and change this later if by chance we were to rally and you wanted to see what it looked like with the gap up. But currently, we're trading gap down, so I've got that selected. Next, I'm going to put us in a similar market environment. We are still below a 10-day moving average, but above a 200-day simple moving average. And then lastly, I'm going to hop in the market events library, and I'm going to say that it is the day before options expiration. That comes from this category right here. I can scroll down just a little bit. There it is, day before options expiration. Hit equals next to that. Now I can click view results. And here we go. These are the results based upon entering the market long at the open of regular trading hours and exiting at 4:15 p.m. Eastern Time when it is the day before options expiration in a weak bull market and you are opening below the prior day close. Historically, we've got 25 samples of this day taking place dating back to 2003. There's 24 for the NASDAQ. There's 20 in the Dow and 25 in the Russell. If we look at the win rates on them, the S&P is coming in the strongest. 68% of those 25 samples have closed above the opening print. For the NASDAQ, that's 58%. For the Dow, 55%. And the Russell is the weakest at 52%. If we look at the average moves for them, the average loss is larger on 3 of the 4 instruments. So for the S&P, the average loss is larger than the average win. The NASDAQ's the only one with the larger average win, and the Dow and the Russell both have larger average losses. So 3 out of the 4 have larger average losses, but all of them are at least better than 50-50 on the win rate, with the S&P and the NASDAQ being strongest. And you can look on the equity curves and see, especially the NASDAQ's been really strong here recently. The NASDAQ's that orange equity curve right here. If we look down at the table below, you can see the more recent years are a little bit stronger than the overall average. You can see that in the equity curves that are flat back here for a handful of years before starting to barely move higher. But for the S&P, last 10 years, a little bit stronger than the overall average. That's also the case for the NASDAQ. The others, the Dow here was not as impressive on the win rates. It's not really seeing that trend here in the last 5-10 years. It's pretty much in line. And then the Russell doesn't have much of a bias in either direction, and you're not seeing anything here in the more recent years either that's strong. It is a little bit weaker. So NASDAQ and the S&P have been stronger in recent years, and historically they're a little bit better overall as well. So hopefully you found that helpful. Good luck today. We'll see you next time.